switch up, I think, today. We'll just start with the COT data, because normally I do this on the weekend, but I just wanted to relax on the weekend. So today we're going to look at the COT data and a quick look at the calendar as well. The calendar is actually quite handy because there's not much actually on. So in 2 minutes we've got the retail sales from Germany. So that's great. So that's actually something really positive. So that's cool. So bear in mind we've got some data, but by the time you see this video it would have been gone. And we've got some RBA stuff coming out tomorrow. Not that much tomorrow either, which is really nice. So it might be okay today. Remember what I said in the Telegram about the FX correlation breaking down? The S&P is actually a sell. Here they went long, so what happens to price? It plummeted really heavily. So that's not a coincidence, that big candle there. It needs to shake them out, but yet they hold and they go long, they add. So even though this candle should have flushed them out, that's a big move, it didn't flush them out, they went long. So this still needs to continue to fall. Like I've been saying for ages, they can't go long. If they go long, it's going to punish them, right? So we could keep dropping, all right? So bear that in mind. We can look at the COT data. Now, what's important about this particular COT data this week is that the big fish know about the war in Ukraine and Russia. Last week, they hadn't really prepared themselves for that circumstance. I don't think anyone really knew Putin was going to invade. No one really knew, only perhaps the Russian administration. So it took a lot of people off guard. So this week is going to be a little bit more telling about bank positioning. So because last week was a bit, it was an unknown variable, and now we know what's going on. And the resolution of it, it's going to be tricky. I think maybe the only way is that if Biden and Putin have talks, I think that's probably the only way that this is going to get resolved. They need to go to a summit, and they need to speak face to face or on the telephone. I don't know if the EU and Putin, I don't know if that's going to be good enough. It might have to be from the United States, and maybe Putin might listen. So if he withdraws his troops, it's going to change absolutely anything that we're seeing on the risk appetite. So lots and lots of geopolitical stuff going on. We've got FX correlations that are breaking down. Aussie's like a safe haven last week because of its link to gold and copper and iron ore. So it's going to be a tricky week, so just bear that in mind. So the Euro FX is signalling buy, and what's interesting is that last week the Euro USD did really fall, so it tells us that the banks were caught off guard, right? So this is currently an EU buy signal here, okay? So we should probably look for dips on EU, but however, you've got the geopolitics of Ukraine being in Eastern Europe and all that nasty business that's going on over there. So fundamentally this might not be so good. We might see a bit of a teetering and it might fall. So it's very, very tricky. AU, or you could do EA as well at the same time. So Australia's ticking up and Euro's ticking up. Right, so I mean that would make sense as well, because EA fell really heavily as well. It fell 5% in 1 week. Let's look at CAD. CAD is that one, so we're ticking up as well. But we're in positive territory and it's ticking up, so that's quite bullish. Do gold. Yeah, we knew that we could kind of probably predict that was going to happen because of the uncertainty. Maybe take gold off actually. And then come down to British pound, sideways, dead on the zero line, so very uncertain with the pound. And do yen. So yen is the lighter blue, so we're ticking down. So that would kind of agree with what's going on in the world. No, yeah, that's wrong actually. No, that should be going up, right? Because it's a safe haven, isn't it? Normally a safe haven. So the yen should be ticking up because we're risk off. But if it's coming down, it's telling us risk on. So it's a bit of a mixed picture today. I think maybe what we need to do is need to just look at price action, technical analysis, keep your fundamental and sentimental in the picture, but maybe just look at technicals, because at least like those lines, they don't lie. Sometimes the candles tell you like false readings and stuff, but that's part of trading, is you have to try and work out whether or not, you know, that movement is fake or it's genuine. If you just zoom out, then you know, it's quite a good way to check if it's fake or not. If you look at the trend, put a big strong moving average on your chart, and you can kind of predict if it's going down or it's going up, and then you can say, oh, that's a fake candle, or that's a genuine candle. So euro is strongest, dollar second strongest, CAD's third strongest, pound is fourth, yen is fifth, and Australia is weakest. So that doesn't coincide with what we're seeing. So maybe we're going to see a big change on the positioning on Friday. So I have to wait and see how we're going. I've given you all the signals on the bubble channel, and just take one, don't take that many. I think if you're going to do anything, I don't know if we're going to be risk on or off. We should be risk off sentimentally. However, if you go to the S&P chart and you zoom out, you know technically we're going to be buy. So we're going to be buy the dip territory. Technically, sentimentally, we're definitely not, and fundamentally, we're not as well. So a bit of a trick one. See how we go, and if you need me to help you, just let me know. Maybe you need some help with the spreadsheet or anything, I'm not sure. Got a new look now on the dashboard, so we'll be looking at this, I think, today. And also the weekly shifting and daily shifting, because we're Monday, it should tally. By tomorrow, then we can, you know, use this, and it's going to be quite powerful. And we'll see how we go. So have a good day, and I'll speak to you soon.